Okay. Hi, everybody. Hi, guys.
Well, hey, Sam.
How are you?
I'm good. Am I reading too much tone that you're sounding a little down this morning?
I'm not down. We're doing a work from WeWork today.
And you're loving
And I know I do like it, but they ordered a ton of pizzas. And I was trying to watch my figure prior, and then I've fallen off the wagon and I've had 4 slices of pizza.
Oh my God.
Yeah. So I'm not feeling well, right?
All good. Assad and I will lift you up. We know.
Yeah. I need to be higher energy. That's the feedback I'm getting. I did a video. You saw that video. Asad saw that
I liked
video.
it.
Yeah. Thank you. But
I thought it was very natural. Like I thought it didn't sound like you had a script and you were reading it, which I thought came across better than if you had it like perfect.
Yeah, the whole point was like, let's try and keep it as real and authentic as possible. Let's show a different side of Sam Jacobs.
This is Top Line.
Welcome to episode 3 of Top Line. How do I sound? Do I sound okay?
You sound terrific.
Thank you. I've got my co-hosts with me, AJ Bruno, Anthony James Bruno, the CEO of QuotaPath, Asad Zaman, the CEO of Sales Talent Agency. Just for the record, is it Asad or Asad?
It's Asad.
Thank you.
Thank you,
everybody. I've been saying it correctly. We've got a great show today. We've got our first guest, and I'm going to introduce my guest, and then she's in the waiting room, and I'm going to let her in. Maybe I should I introduce her? We've never done this before, but here's who she is. She's the best growth marketer and that I know of. She's one of the top CMOs in New York City. She's been chief marketing officer of Signpost, of Electric, and now she's the chief revenue officer of Teampay. So she made the switch from being a marketer to the head of revenue, which aligns with some of the things that I've been talking about. And she's awesome. And she's also been a friend of mine for a very long time. She's also the dean of Chief Marketing Officer School for Pavilion. So I'm going to go ahead and click admit, and we'll welcome her in. Let's see if she shows up. Can you hear us?
Yeah.
Hi. So it's
Andrea.
Andrea, is it Kayal? Let's officially
No, it's like the lettuce. It's like kale.
Oh, I didn't know that it was kale.
No, like kale. That's so funny, Andrea, because I have a friend. My head of product, actually. His last name's Keil. How would you think to pronounce that?
Kale?
No, Kyle. So the last names that begin with K?
Yeah, the top.
Who knows?
Well, Andrea, you're our first guest that we've ever had on this podcast.
God, so honored.
And before I let you in, I said, we've been friends a long time. Probably at this point, like 15 years. You are the best CMO in New York City. You are the best growth-oriented marketer that I've met and that I've worked with. You're the dean of CMO School. And also, interestingly, you've made the transition from CMO to CRO. And now you're CRO of Teampay. Andrea Kayal, welcome.
Thank you, Sam. You're so kind.
How are you today?
I'm good. I'm actually in between sessions. We're at a women's summit today. It's important to me to participate in things like that, be a good advocate for, women in tech. So it's a great summit. It's put on by Workbench, but happy to be here.
What's happening? What are all the women doing together?
We're having cocktails later. That's the most important part. But just listening to kind of like how some of the, women in leading tech companies, Stripe, Google, how they kind of came up in the game and like where their challenges were and how they navigated through it. It's pretty cool.
Andrea, have you held these summits before, like previously? Have you been a part of these?
I'm pretty bad at going regularly, but when they're, with like the caliber of talent here, it's like something you really don't want to miss. And plus they had this like really awesome dinner last night that they invited me to. So it just, I think it's important when you get the opportunity to do that to go. So.
Well, you mentioned Stripe, which I think is really interesting. Actually, my CMO came from Stripe.
Oh, wow.
Marketing at Stripe. And I'm interested. I've talked with her about this with Stripe just in general, like their IPO, and you mentioned Google and all these bigger tech companies. Like, is there a difference in feeling and, like, I don't want to say energy, but just how people are discussing the broader tech market, even at that size?
Yeah, you mean like based on like the volatility happening right now?
Yes.
Frankly, they weren't actually talking about their companies. They were just talking about like how they're navigating like their personal journeys, which I find to be a little bit more useful because every company is different and nuanced and hard to follow the company path sometimes because, sometimes there's a stroke of luck. Like you were ed tech in 2022 or whatever, the restaurant in 2022 and everything like got nailed, or sorry, 2020, the pandemic. So, but yeah, and the other cool thing is like some of them joined when like, Google was like 1,000-person company, or JustWorks, the SVP of product for JustWorks, she joined JustWorks when they were 5 people. So just like hearing, that their perspectives was pretty awesome. Sorry, I didn't mean to derail the conversation.
No, I derailed it.
What are you talking about? You're not derailing anything.
Okay.
You're the guest.
Okay.
This is how this goes.
Yeah, we're figuring this out as we go. We don't know what
Sam
this
have
is
great
supposed to.
conversations, and then I just come in and I'm like, and they're like, okay.
Yeah, but you've also got great anecdotes. I'm excited. I want to hear about this this company that went from 3 million to 1 million. But first, I did a little bit of a job of introducing you, Andrea, but give us a little bit of your background, because one of the things we want to talk about, to the point of, growth and your orientation to growth. You drove tremendous growth through electric, and now you're at Teampay, and we're all wondering, how do we grow? What's the best formula for growth, and what should our expectations be in 2023? But tell us a little bit about how you got into the marketing game in the first place, and give us a little bit of context on your bio.
Yeah, I mean, I went to University of Michigan where I played soccer, and I graduated with communications. Go Blue! So I like try to combine the two things that I loved, like sports and like talking to people, and like just kind of the high energy events. And I joined an agency called Octagon. We did pretty like fun events for them with MasterCard and BMW. My first job was like driving BMWs all over the country. We did like 180 events in 365 days. It was like bananas, but so fun. I truly found out how hard work, really kind of what that meant. And then the other opportunity I had was on the MasterCard account with the World Cup. I was Paley's assistant for 2 years. That was like beyond incredible because of my soccer background. So I grew up with big brand, big marketing experience. I went back to business school, and then I got into tech, varying industries, varying sizes. First 2 companies from 5 to 25. Then I was at Upserve. We went from 30 to about 50. And that was a very interesting experience because that was PE backed. That was a Vista backed company. And so I got a lot of great learning from that. I mean, the board meetings were like 5 hours. I think I had 100 marketing slides. I mean, it was very different operating sort of acumen that you needed for that job. And then electric, we were 5, we had 2 marketers, we went to 50, went about 30 marketers. I had SDR and BD and partnerships and those kinds of things. So yeah, now I joined Teampay as CRO. I just wanted to see if I could just expand the scope of the teams I was overseeing, and seeing it really, if this job you have, Sam, on the sales side was as hard as it is prior to you being CEO of Pavilion. But and yeah, so it's been a great, learning experience.
It's easy, but also Sam called you the best CMO in New York. So I want to know what it's going to take for you to be the best CRO in New York. How do you get that title? Well,
first of all, I'm flattered to be the best CMO. And I would say, obviously that he's that's not true. There are way better marketers than me, but I think one of the things that I learned early on was to make sure that marketing could create clear value inside of the organization, not like vague or ambiguous, like what is marketing doing over here? I always made sure to carve out for marketing exactly what our role was going to be with the CEO. And I also made it a point to do like planning and forecasting for what we were going to deliver, as much of a science as sales was making it for forecasting deals. So I would say like that's probably, when you think about growth, been the keys to how I've helped the companies kind of get to where they need to be. Like just like a hedge fund, I made sure that marketing were capital allocators. That's my job. All right. Like the LPs give the VCs money, the VCs give the CEO money, the CEO gives me money, and I allocate it. And so like I have to put it in the funds that are performing the best. And so I always try to make sure that capital allocation not only like could be predictable, but also like efficient because I learned a lot about how to make that a priority when I was at Upserve, because the PE was like squeeze a dollar out of a penny. So electric was a little different. Again, that was sort of like not a growth at all costs, but it was, a little different mentality for just making sure we got more people in the funnel. But I would say that's kind of what I think made me, I wouldn't say like a great CMO, just an operator that I think people could trust. And so I'm bringing the same sort of methodology to the CRO side, which is like, just make sure you put in good people. By the way, that's like really the job, hiring people who are force multipliers. I have great sales leader right now, great CS leader that I had to put in, and, just trying to do my best.
Andrea, your shift from CMO to CRO is really interesting. Like, one would assume that this shift should happen a lot more, but it doesn't happen as much as you would want to see it happen. It makes a lot of logical sense. You just don't see it play out as much. In your role as CRO, do you own marketing now, or is this like the quintessential CRO of CS and sales only?
No, marketing is there also. So it's marketing, sales, customer success, which includes onboarding, implementation, and support. It also includes partnerships and RevOps.
Wow. So was that a big part of your decision-making as you were moving, that I want to find something where I can own this entire revenue cycle? And so I need to find a company that's got this available?
Yeah, I mean, it was less about like my scope. I really wanted to make sure I could oversee a closing team because I had customer success also when I was at Signpost. So I've overseen customer success before, and I had RevOps before, but really like the sales and marketing component was important to me because like I said, I'm always like, shit, is it that hard? Like, why do all these sales leaders get the CRO roles and the marketers are over here like, we'll just stay CMO forever. We're not worthy of this job. So yeah, it was less about like needing all of it. I mean, it wasn't like a chest beating exercise. It was just like can I see if I can use what I've applied on the marketing side, like my skills and having grown marketing to sales, like the methodical approach to doing that, and see if I could make it better. And the good news is, I mean, from Q4 to Q1, we grew logos by 150% and sales by, about 70%. And so we should expect to do another 100%.
70% quarter over quarter growth.
70% quarter over quarter growth on the ARR side, 150% on the logo side.
So nonchalantly, just
give this woman more capital to allocate. Can you allocate some capital?
Actually, the stat I'm even more proud of is that we took the sales and marketing costs down by 90%. So we grew by 70%, but we took the sales and marketing costs down by 90%.
Shit.
So like
you literally
that was
that penny and dollar analogy, and you're like, no, this is it's a hay penny. That's what I'm gonna get.
How did you do that?
Yeah.
I mean, it's all about how you're allocating your capital. For example, if you just squarely on the marketing side, if you were investing in billboards on the West Side Highway before you have tapped out your high intent or your like email marketing database, which is free, like wrong decision. If you have 2 PR agencies and you don't have a fucking predictable engine, like wrong decision. So like, I'm sorry, I don't know. Can you believe
Go for it? Yeah.
I'm into the swearing personally.
We're good for it.
Okay. I know. I try to remember that not everybody.
You're a CRO now, like
yeah.
Part of the game.
Yeah, like I have the title that allows me to curse. But you're investing in things that should be more high intent first before you are investing in things that are just pure brand play. Like we were investing in ads in the Wall Street Journal, which are very expensive, but we hadn't like yet sent an email to the database. I'm like, this doesn't feel right. So every single dollar I went through and like just put into different tactics that again, I have been doing for the last like 15 years. So we started that. Also, we did have a lot of people who we had like heavy management layer that felt like they wanted to be true VPs and not like get into the weeds and do the doing. Like I shouldn't have to ask my VP of sales, one, your call can't be off by 75% every month. But two, you need to know the deals better than I know the deals. And like, that wasn't even happening. So just like on the execution side, there was just a lot of low hanging fruit there. So I just went through like every freaking piece of every team and like, just kind of like, really like dug in. And that is a difference between like maybe a true CRO and one at a startup, which is like in title only, I am actually still having to do a lot of operating myself, primary work.
That's fascinating. So how does this compare? How does the performance compare to expectation management? Because you joined the company, Q4 was a shit show in the market, Q1's been rough. You hear about how new business is difficult, how churn is really high. And so was this like a huge surprise for you guys? Or when you were thinking about Q4 and Q1, you're like, don't worry, we got this. Like, this is what we're going to do.
Well, I did a lot of diligence on Teampay before I joined. Obviously, the CEO wanted me to join. So maybe not all of it was exactly true. But he's like, you're doing more diligence on this company than our Series B investors did. I'm like, well, I need to know what I'm signing up for. I'm like, and so I did know that coming in, I was starting from a very low spot. So I knew just by like doing simple things, I could maybe get 50% growth. So, that's kind of the short answer to it.
And how are you guys thinking about the rest of the year? Because we're in this environment now where, actually, I guess the question can be that, do you take the macro into account when you're planning and you have a point of view on where the market might land up in Q3 and Q4 and you are doing things accordingly? Or for CROs and CMOs right now, should we be optimizing to create as nimble of a unit as possible because we can't predict the market, so we have to just see how it plays out and then adjust really quickly? How do you think, which school of thought do you fall into?
Yeah, I think I can speak to Teampay. We're only planning on basically a quarterly basis at this point. FinTech in particular got especially nailed with the market. Huge. And because, for example, like Teampay is business spend management. We actually, we take 70% of our revenue comes from our customer spend and 30% is SaaS. I'm trying to, I flipped that when I was planning this. Well, I didn't flip it. I increased the percentage that's coming from SaaS and lowered the percentage that's coming from spend because I knew that customer spend was coming down. So we were doing simple trade-offs like that. So I'm like, okay, I have to sell more SaaS if I know that it's going to be still a problematic or perhaps problematic time for spend. So we factored in as much as we could to try to combat any like of the macro issues. But the other thing I'll say is, you plan a quarter and it all changes again in the next quarter. So like I gave an annual plan. We've changed it 3 times already, So, yeah, I would say we do our best to nail the quarter.
Interesting. I think that's the right way to think. AJ, how does this map with you guys? Like, are you thinking of it from a quarterly perspective or are you trying to predict the year?
Oh yeah, well we're just coming off of 200% quarter over quarter growth.
Nice.
You fucking liar.
170% NRR.
We came into the year doing a quarter by quarter financial plan cut. I mean, I think like every company started to just, basically boards, if you were Series B or higher, every board was just like, okay, screw the annual. Everyone missed by 60% last year. You didn't know shit about your companies, clearly. It's like, wait a second, hold on. Where is this all coming from? So everyone went quarter by quarter. We did a half year cut. We were on plan in Q1. And this quarter, I don't know. Are
you on a calendar quarter, AJ?
Yeah, we're on the regular one. We haven't switched yet. And I'm like,
why do you say yet? Why do you have to switch?
Why? Yeah.
I don't want
because everybody does it because of Salesforce, and they're all like, "No, you don't understand."
And then they all make this bullshit like, "Oh,
about Christmas break." It's all about, it's like, it's I'm like, there's weird reasons for any kind of quarterly cadence. Anyway, stupid.
Thank you, I appreciate that. We're on a regular cadence, so we have a May board call where we'll take a first financial cut of the second half of the year. It's all about cost structure, and that's what we're looking at. And, it's funny, you can get the efficiency metrics. They're like right where they are. And they're like, okay, great. But let's make sure we're talking about growth. I'm like, well, what the fuck?
Yeah,
like, Andrea's like cut her spend 90%. Now we didn't have billboards on the 5, so I didn't have
Okay,
that.
well, good. Yeah.
But
Did Teampay have billboards? Wow.
Yeah.
I mean, every founder, you know who started it all was Percolate in New York City. Percolate got cab tops 15 years ago. And I was like, I want a fucking cab top. And then JustWorks got Subway ads. And I was talking to Rob Lopez and I'm like, I want Subway ads. And they're like, well, it's $200,000. Like, do you want to just drop to, and to Andrew's point, I'm like, well, there's probably other ways I could spend $200,000.
Sam, it's so funny you mentioned that, because they were competitors with us in the social analytics space. And we were just the boring media monitoring PR. Andrea, I was a founder and president of a company called FriendKite, which actually took some. So you said the company Vista bought, was it Signpost or was that a different company overall?
No, Upserve.
Upserve. All right. But we, I remember in a board meeting, they brought up all the social fucking analytics companies and they all had billboards, all of the things. And they're like, when's TrendKite going to do it? I'm like, we're a boring PR company. We don't want to do that. So I ran into James and had a joke about that.
Yeah. But this is why, again, like, I think I'm on the board of a company called Help Scout. I'm an independent there. I encourage every founder, CEO to make sure you have a strong operator on the commercial side as an independent, so that when 2 of the VCs, investors, say, why don't you have billboards? The independent can say, because I agree that's not a good decision yet. You know, like, you need kind of help there getting the board to really understand like some of the decision making around the commercial decisions, because they don't get it. Mostly they don't get it. Some do, but
give us your take on the economy right now. We talk about that. We've talked about that 3 weeks in a row. You know, it sounds like you've done great work with Teampay, but you know, to the point of everybody on this call, you know, we have an annual plan, but mainly the plan is the 13-week cash forecast that I have my head of finance do, and every Monday we look at it and trying to figure out. And I've not finally, if he's listening, Quibben, I love you. But I've trained him to be far more conservative. So we tend to beat our cash plan because he's so pessimistic on transactional, like services sales, like sponsorship sales. But like, so I'm aware of, and then I'm just tracking ARR basically on a day-to-day basis. But we got a lot smaller a month ago. And so, you know, our emphasis isn't growth. It's on not shrinking, on you know, being profitable on a go forward break even basis. We'll grow about 30% this year, which I feel is pretty good if we can end up being profitable. But
that's awesome.
What's your view on the economy?
I feel good about it, but I'm a commercial leader. I'm like optimistic by nature. Well, I would actually think I'm a little bit more pessimistic. I think I'm like, there's the CEO founder who's like delusional about like optimism.
Yeah.
And then there's like the true pessimist. I think maybe I'm in the middle. But I don't know. I mean, I don't think that a lot of companies were just doing the right things related to spend, and like how it just like it needed a reckoning. Like I'm so happy it came. I think, you know, some went way too hard on, you know, trying to maybe fix kind of the spend and problems or whatever. Some companies will have a hard time raising capital and they'll have to bridge to a sale or whatever. And I just think that like, you know, for those that do have good businesses who are highly efficient with their capital, it'll be just fine. We got to ride out the wave. But, you know, I don't think we worry about it. I think we just like keep pushing on.
I have a question.
I like that mindset.
I have, how do you know, part of what Pavilion was started to do was to help people like you and me at the time navigate our careers. How are you thinking? You know, you're on a board, which is awesome. You've moved from CMO to CRO. Like, if you reflect on your career journey and sort of optimizing for the things that are important to you, how are you thinking about it over the next 5 to 10 years? And what are the important lessons that you've learned? Because there's probably a lot of people that want to step into your shoes. They want to serve on boards. They want to transition into CRO. Are you trying to be a CEO? It certainly seems like you're certainly better than the CEOs on this call in terms of experience and qualification.
He's like wearing a jacket.
I know, she looks professional. We look like children. It's the difference between men and women.
You guys, you're funny. Well, I think a few things, about my career journey. I was very intentional about the roles I took. I did a lot of diligence on the company. I think I wrote I did an article about this, which is just interview companies with the same rigor they're using to interview you. I understand that that assumes you can be picky about kind of the jobs you take, but I think it's important. I teach this in CMO school, but it's your success is largely predetermined. So picking the company that has the ability to make sure you're successful is really important. I think people overlook that. And a few things that I look for in a company, first and foremost, at the very top of the list is an empathetic leadership team. I think if you have a CEO that's not good at their core, Sam, you wrote a book on this, you got to be kind. You got to, you can't be a jerk. And you really kind of have to do a lot of back channeling on the CEO. You got to read the Glassdoor reviews. You got to check to make sure that you're joining a great place, because it's all people oriented. And if they can't trust the leaders, it's over. The second is product market fit. I like to join need to haves, not nice to haves, because I do feel whether it's a downturn in the economy or whatever, usually you can get the sales done because people still need to run their business with it. And then the last is total addressable market, but most importantly is service addressable market. For example, electric had a 12 million company TAM, but we probably could only service about 50,000 companies because we had so many requirements for why we couldn't deliver the services to particular companies. So you really need to do some checking on that. And I like big ones. I like big service addressable markets where I can generate a lot of leads and stuff like that. So I would say that I really was intentional about managing my career. And then when I felt I had enough experience to be valuable to the board, I used Bolster, which is Matt Bloomberg's company. You know him, Sam.
Yeah, I do.
You guys know him
quite well.
Yeah,
Matt Bloomberg. He spoke at our CEO summit.
He's
signed book copies.
Yeah, exactly. He was CEO of TurnPath.
Yeah. And and now he's the CEO of Bolster. What a guy. I just had breakfast with him 2 weeks ago. And anyway, you get it. He has a company called Bolster now, which does this matching. And he's the one that found me the opportunity at Help Scout. So I just, I took a lot of time to be thoughtful about. And look, I made mistakes along the way too, lots of them. And, because these companies are risky and the market is crazy, but, just
how's your energy levels at this point? Do you feel like you've got another 10, 15, 20 years, as long as it takes? Have you achieved what you wanted to achieve? How do you think about where you are? Do you feel like you're at the summit and you're coasting from here? Do you feel like you still haven't hit the big one? How do you think about it?
Well, I think what I'd love to do is join a company for the next 5 to 10 years that is not so focused on growth at all costs, that allows me to keep my sanity a little bit more, because I know I can do it. I've 5x 2 companies, I 8x 1 company. This is something I feel good about knowing I can do, but I don't want to necessarily. I want to do things the right way with a company I can stay at for a long time. And so that may not be Teampay, but I do think that there's, a company down the road that maybe I find a home with a CEO, many years.
Maybe it rhymes with Schmazillion. Who knows?
One of your experiences was at a PE firm for a bit, right? And I was talking to these guys, the analysts at PitchBook yesterday, and they shared some really interesting data. So Series C rounds are just not happening. They've completely dropped off the cliff. Last year, there were less than 250 IPOs. The year before, there were 2,000 IPOs. And so IPOs aren't happening. PE activity is just fine. It's doing really well. The multiple is shocking. It's 1.7 times ARR, which is
wow.
wild. Public median for cloud companies is 5.6, so that's also not great, but the PE one is wild. It seems like there'll be a lot of PE activity right now, right? Like there's these Series C, Series D stage companies, they can't raise, they can't go public.
Right.
Some of them will get picked up. And so can you speak a bit about your experience working for a PE company? You spoke about how there was all this rigor. How did that help you if with the next few roles that you went into the venture funded side with?
Yeah, I mean, I was not in the growth at all cost mindset. I approached every role. I mean, this is how I was raised this way, so I'm not just like a frivolous spender like by nature. My wife is. She never stops spending. We get Amazon packages every minute of every day. So
your wife and my wife need to get together and spend money.
Okay, Asad and our wives can just. I don't know. They can.
We need a group or something.
Yeah, right. But anyway, but it put a whole new level of like understanding about what matters. So, for example, when I joined Teampay, I gave the FP&A team a list of 13 metrics that I wanted to be tracking. One of my favorite ones to track is cost per dollar of new ARR. That's like and you use that by lane, and you are like, okay, this is how much it's costing me. By the way. What I found in that case that our SDR team was like 54 times as expensive as, the marketing spend was, but it just gives you like good clarity on like how to continue to operate. And so like, those are some of the metrics like operating, like ideas that I just like, I took with me and the board member that we had at the Vista company, this guy named Darko, I'll never forget him. He's Croatian. I am not easily intimidated person. I needed like to breathe into a bag before like these board meetings because his level of processing and questions were so intense that like my prep for that meeting, like I took a whole week just to like read and know every data point because he would ask you a question. You have 100 slides. He would ask you a question that wasn't on the slide. So you had to just like really know your business inside and out. So I would just say like, I took a lot of that with me, making sure I'm always like very prepared with the data I have. I don't have a slide ever with a data point that I can't speak to, stuff like that.
Yeah, that's super interesting. We've also like gone from this market like 10 plus years of this 0% or close to 0% type of interest rate. And now, we were in it for too long and we are dealing with the issues, inflation and everything else that comes out of it. And what's clear is that we're now in an environment where the interest rate won't be zero for quite some time. And that has huge implications, right? On everything from the ability to create demand to the tactics that we deploy to do so. Could you speak a little bit about some of the tactical shifts that you're making in this role where you are in this new environment compared to electric and past positions where you were in a different type of environment where capital was easier to raise, the demand was easier to generate, et cetera, et cetera? Yeah,
I mean, interestingly enough, though, I haven't felt any of that pain. Like I don't feel any of the inflation pain. It's not like the Google ad prices went up materially. Like we didn't feel any of that necessarily in our spend, and tactics I kept are all generally the same.
Interesting.
So I don't, I don't feel it. I know it was free money and now it's not free money, but as it relates to what I changed because of that, didn't vary all that much. We didn't see like huge declines in what people still respond to or how they behave.
Well, that's fascinating. And are you thinking about, as you look forward, you've got things like generative AI, right? Which is broken through as of January. Everybody has seen that it's going to become a real part of our lives in the very near future. And some of the biggest implications are on productivity for marketing and sales. How are you thinking about that? Like, are you starting to implement it in some ways? Do you see, a particular type of use case or use cases that you guys are going to leverage this for?
Well, two things. One, we started using it for SDR outreach. We don't see a material change in the response rates from ChatGPT emails versus our own. It certainly makes it easier to like test more and write more and like make it more professional, make it less professional, like we can do that kind of stuff. But Sam, this is something that I think I want to add into CMO school, which is Like we need an expert in the marketing space who really can teach us how we need to start thinking about it. Cause I have no fucking idea. I'm like, I don't know what I'm supposed to do with this. It drives me nuts thinking about it. Like, do I need a person on my team who's just like this AI expert now? Like, I don't know. It's hard for me to think through the implications for marketing, honestly. And it's overwhelming. And I'm like, holy shit, I feel old because I'm like not ahead of the game on this, but I don't know. It's going to change it. You are not wrong. How and like what my role is and responsibility for getting in front of it is still unclear.
It's a good point, because like I spend all this time poking around randomly with it, but I'm just like poking around. Like I'm not going through it in this like professional guided way. So you are right. Like a person who's an expert kind of showing us, here's the 7 things to do.
Someone needs to tell us.
Yeah,
what's the playbook for AI? I'd love to know what it is.
The board meeting, Andrea had a board meeting last week that was preceded right after was our latest episode of Top Line. So that was fun. But I had a board meeting and I asked the board members out of all their companies, and let's say, because so Insight and Tribe Capital, so bigger funds, like out of all their companies, how many have roadmap items for generative AI? They all of them do. So every single company has something on their roadmap, which is just kind of fascinating, whether or not they know what they're doing with it, or you're not alone for sure. That's true.
Yeah, I mean, yes, I think every product needs to be thinking through it, but like on the commercial side, like I need help. So we need to find somebody who's just good at this shit.
I think what's going to happen is which is related to what you said about the marketing efficiency versus SDR efficiency. I guess I'm curious what you think about SDRs. I guess I'm kind of dead on them is how I would phrase it, to use a colloquialism from college, in the sense that like, I think that there's no like special use case. It's just that like AIs will replace SDRs. That's all. Like you're sending a bunch of emails, and right now the human being is pressing go on the emails, probably because you're probably drafting them, or your content person is, or maybe they're making small tweaks. And then there's responses to some of those emails. And then there's a response that's required to those responses. Well, none of that back and forth is particularly challenging from an AI perspective.
I know.
And if all you need is like a back and forth to get to a call, you'll probably be able to do that as a stopgap before you replace the human as the seller. And especially if you have any kind of self-serve or PLG motion, then you definitely don't need any humans, because then it's just back and forth to get signed up to create an account. So I think and I guess I'm curious how you think about, even in the absence of AI, I've been thinking a lot about just, does the current, especially for like a mid-market product, which I would assume Teampay is, I don't think you're like full enterprise yet. Like, does the mid-market approach still work, of like a bunch of sellers, most of them suck, a bunch of SDRs, most of them suck, you need an SDR manager, that person's probably pretty good, but they're not in a performant capacity anymore, and then you need a sales manager, then you need a VP of sales, and you got like a team of 20. And I've been doing the math, and if you, obviously it's like subjective math, but if you assume higher close rates for your top sellers and higher average deal size for your top sellers, which I don't think is like two crazy assumptions, then basically you can do the same with 2 sellers that you can do with 10. So I guess I'm curious, when you're looking at your team, what do you think about the current kind of predictable revenue motion? And you mentioned comparing the SDRs to your marketing budget. Like, how do you feel about sort of like the existing infrastructure that go-to-market teams are using?
Yeah, I mean, given our growth rate for this year was, we set it at 30%. The first question you have to ask yourself is, can I get there without it? Like, do you have other lanes? Like, for example, we're launching a partnership with TD SYNNEX, because I believe that distribution channel is a better, that's the one-to-many, because it's exponential scale than it does an SDR sending, like there's conversion rates. It's just like a very simple math problem on like how many emails can they send and like whatever. That one-to-one, like every time I add an SDR, I can add, let's just say 2 opportunities every month. 1 SDR, 2 opportunities. It's never 20 opportunities, but TD SYNNEX, I add 1 partner. It could be 20 partners who send us 50 deals. I mean, we're working through that math, but I don't see a world in which SDR is a better option than some of that. So you just need to evaluate kind of like what works for your company. But SDRs always reported into me at most companies, mostly because I just consider them a touch point. Do you need that touch point? Do you need a personalized touch point? Because you can't get after the target market that's coming inbound. You might need to do like a more laser focused approach, which is SDR. So I don't know, it's a nuanced answer, but you can probably get to that answer pretty quickly by just like doing some math.
Sam, to your point, like, I don't know if in the near term you can assume larger deal sizes because there's just less money available in the economy, right? You've got a challenging economic environment, especially for tech, selling into tech. You have a hard environment to raise money in. SVB is done, so you can't get all these other facilities. So hard to assume the larger deal size. Also, because if this AI thing does become a productivity unlock, right, then what's going to happen is every company, like you said, will just have less people. So there are less seats as well. And unless we change our pricing models, there's going to be a deal size implication there. But you're 100% right about the fact that the structure of these units fundamentally changes moving forward. The unit economics of a business then changes as well. And that's really exciting as moving forward, right? Because there's so many companies that just never made it. Like you shared in your revenue collective deck back in the day, 1% of seed round companies make it to Series D, right? I remember that deck. And so
I made that up.
That sounds about
I've been fucking quoting that shit for
ahead.
4 years.
Perfect.
The amount of places
I didn't make it up. It was from Tomas Tungus like years ago. I'm just kidding.
Oh my God. I've gone into venture capital firms and had it on a slide with your name underneath it. Like, fuck.
What he's not telling you is the N was only 10 companies out of 10.
It was the last 10 companies that I Googled. And I was like, only one of these IPO'd. Anyway. Well, Asad, I think you're not. There's a lot of cascading impacts of all of this, because the other cascading impact, and again, I don't mean to just be an all-in fanboy, but Chamath talks about this, that it also might flow through to enterprise value. There might be, if the concept of the enterprise itself and selling into the enterprise, if companies become smaller in general, then deal sizes become smaller in general, then the total addressable market or the serviceable addressable market, but the dollar value of your opportunity definitionally becomes smaller. And that means that instead of early stage, and like that might mean, and that's what we talked about last week, that like there's a bunch of growth equity companies that have 1,000 people that raise $200 million. And that's not, I don't think it's going to happen tomorrow, but I think over the next maybe 24 months, that they just don't have an opportunity to support an organization that large. So I think it's going to be like, okay, smaller rounds, and how does all of this work if it's a lot of $50 to $100 million exits as opposed to like $250 to $1 billion exits?
Well, I mean, Asad made the point on PE, and there's a true $1.6 trillion overhang or something ridiculous in PE that there was someone I was talking to the other day, and they cited that. I'm like, yeah, but is that real? Like, they're going to capital call that. Will the LPs like just kind of renege on it, or will they have to go pay it?
The 1.6 trillion overhang is outstanding capital commitments that needs to be deployed
for PE. Yeah. So the Vistas of the world are like, they're probably frothing. Like, we got to go buy companies at some point. Can't sit on our hands through this. So like September is feels pretty ripe to see a whole bunch of activity just flurry. And, it's a down round situation. It's definitely the growth equity funds are definitely going to be like, well, got another write down, but it's going to be a little painful for sure.
There's some boards where there's this interesting situation where if a company does a massive down round, then the venture capital firm has to remark that in their book, right? The one that did the previous round. And that creates a huge conflict of interest. And I wonder if there's been advice being given around not taking a down round, trying to get by as long as possible. And eventually, instead of taking a down round at like a 40-50% discount than before, you're now having to sell your company at 1.7x ARR. It'll be interesting to see what plays out, because this Series C data was the most shocking to me. It's just not happening. I think AngelList put it out, and it was like there was no Series Cs are happening. So what happens with all of these companies?
What do you think happens, Andrea?
I just think that there will be, the M&A activity will have to, will drive up significantly, because there are a lot of companies that, if I think about it, are actually much better inside of a bigger company than they are as an independent. I'm like, why are you spending all this money to try to like, acquire your own customers, get deployed inside of a bigger one where your like distribution is now, you take,
Slack.
what's that?
Slack was a good example of that.
Exactly. Like they just deployed it to all the Salesforce customers, like so smart. Like why try to grow on your own? I mean, obviously that they made the financials well worth it, but I just think that it'll be a lot of companies getting gobbled up because the economics just do not make sense. And they're like, okay, well, let's just deploy it inside of something else.
Yeah. The existing shareholders are going to be it's all about the valuation. It's just going to be, can you sell it for less than for more money than you raised? And I don't even know if that's going to be true. I was talking to an advisor a while ago because it was a frothier time. It was about a year ago, and I wouldn't call them a competitor, but a similar community, had become a unicorn and raised $100 million. And they've gone through a lot of trouble recently. And the guy said, Sam, how much investors think a company's worth when they write $100 million check? And I said, I don't know, $1 billion, 1.2 billion. And he's like, nope, they think it's worth $100 million. And that's not literally true. Obviously, they are in the business of earning a return on capital, but fundamentally, their point is my downside risk is the check, and I can get my money back worst case.
Yeah. Right.
Yeah, that power law really applies, right, for them.
Well, we're talking about the capital side, but Andrea, something that you said that just really stuck with me. You used the word rigor. I love that word. That's a great word in your diligence. And a big part of this is the people. What happens to the people? You said you like to work with great people, and you thought about that with your team, your CS leader, sales leader. As a CEO, that's the same thing. We want great thought partners and like really good thought partners. So like for us in this type of market, as we're thinking about it, it's really just like, how do we continue to make sure that we have the right team just through some of these challenges? Because like you've made it so I loved how in the first like 30 seconds you made this very streamlined. I was like, oh, well, dollar in here equals X over here. Just like figure that out. Like, duh. Yeah. Me as a CEO, I'm like, yeah, that does make sense. So I really appreciate that lens of it on the other side, on the people side of just like, well, if you're sitting there as an exec, like, how should you, maybe you're public, like your horizon to go public 24 months out, but what about these Series B or Series C companies? How should they be thinking about it within, as an operator in the company as too?
I mean, you mean as far as the people are concerned, AJ?
I guess I would go back to your evaluation of a company, and if you're sitting out there like thinking it, listening right now, and you're like, I don't know, I'm asking myself a lot of questions about my own organization.
Yes.
What's the first step for them to go out and do that diligence in finding the right fit? Yeah,
I mean the numero uno. I have this like at the very top of the slide that I have for our CMO school. It's just GRR. Like I know investors care a lot about NRR, but like you just need to know if the company has a product people love. There's a lot of benchmarks out there about what good GRR is. I would say that the market has been unkind to every company. So like maybe this is a sliding scale. For enterprise companies, obviously it's much higher because it's way harder to rip it out. But let's just say like you're a mid-market, SMB mid-market. I don't know. Like I would even say like a 70% gross retention might be good. 70% of your
I was going to say 65 to 70%. I think everybody's been lying about their, or just inflating or taking out negative outliers out of the data set. So like they're saying like 80, 85%, 90%. I always think, I'm like, think about what that means, because a 90% GRR means a 10-year lifespan, because it's just the inversion of the churn rate. 95% gross revenue retention means a 20-year lifespan, right? Yeah. And I'm like, name a product you've used for 3 years consistently without changing.
Exactly.
Like, have you used Gong? Even if it's Gong or Outreach, you probably thought about ripping it out 2 years later because the salesperson was super aggressive. If you've used some shitty commission calculator, you're probably switching to quota path right away.
I love it. Help Scout is a customer of ours, by Andrea.
Oh, really?
Sure.
That's awesome.
Don't tell them to cancel in the spirit of efficiency, Andrea.
I won't. Well, I'm sure it's generating a high ROI for them, so that won't be an issue. But I think that would be the first thing I look at is, generally, is it a beloved thing? That commercial leaders cannot fix. It's the one part of the business that you don't have control over. I know a lot of CEOs are very particular about making sure like they own it with the CTO because it's their baby or whatever. But if it's low, you always have a problem kind of like selling your way out of that issue. So
it's a great point because so many people try and search for like these new categories, and the things they're looking for sometimes don't lend well to making a great decision, because one could say that, spend management is a busy category. Fintech is feeling some pain from a fundraising perspective and a few other angles. But by looking at that number, you still were able to find the most exciting out of a list of, I'm sure, very exciting opportunities. That ended up being the one, right? Whereas if people were just looking at these news items, they wouldn't have even looked at the company and found that thing. So I think it's a really interesting point.
Yeah, I was actually also a customer of Teampay at Electric prior to having joined that. And I was like, I love this product. It's like really easy to use. It's like helps me as a functional leader manage all the budgets we were spending $8 million. I'm like, managing all of it, expense reports, like give me a break, too hard. But anyway, yeah, I do think NDR, while like an important metric for other reasons, it obfuscates the true issue. So like, it's great that you can sell more to your customers, but like, are they leaving? I don't know, like the logo and the dollars. Because if somebody is paying, it means that they see the value. Anyway, so that's
what do you think about
that would be at the top.
What do you think about sort of like polarity of customer engagement as meaning like you have some customers that love it, like some people really, really do love it, and some people don't. And that shows up as like 65%, 70% gross revenue retention. Yeah. I still think for me, my takeaway there is how do you make more money from the people that love it as a path to getting to close to 100% net dollar retention, so that at least when you grab a cohort of 10 to 20, when you grab a new cohort of customers, that, they're not all going to love it, but enough of them are going to really love it that we can like grow with them really systematically.
But only the people in the company can know that, right? That it's 65, but there's a group that fucking love us. Because if you're interviewing with a company and they're like, we're churning at like 50, 60%, but trust us, there are a bunch that really love us. You're not trusting that, right?
Well, you have to obviously understand why it would be like, I would say 65% would probably be on the lower side, but like, you would need to just make sure that you're working with your marketing team on making sure you're getting the right ICP in, because sales can sell it, but like you need to just get more of the people who love it. Every dollar though, you can put into the revenue, every dollar of revenue that you can get through your customers means you don't have to get it organically at the top. That's the expensive part. Very cost effective to do it through the customers. So like when I was doing the plan, I modeled in, I'm blanking on it, but I think we had like 110%, NDR in the plan. I specifically built, people around trying to get that money. So because I'd rather put someone there than on the new business side, trying to get more opportunities.
Makes sense. I think we're just about the end of our time together, Andrea. Thank you so much for being our guest. Any parting, what's your number one piece of advice to people trying to navigate this market right now? Your parting words.
3 deep breaths. It's like, it's going to be fine. Just, relax. It's all going to be, have some cocktails. Like just, it's going to be fine. We'll get through it.
That's great advice. If folks want to reach out to you, maybe they want to hire you in some way, or they want to engage with you, or they want you on their board, what's the best way to reach you?
LinkedIn.
Fair enough.
You can hit me up there.
It's spelled Kayal, but it's pronounced Andrea Kayal, like the lettuce. Andrea, thanks so much for being our guest.
That was great.
Yes, thanks for having me.
Yeah.
See
you soon.
Cool. Bye.
All right, guys. That was episode 3 of Top Line. Any parting words before we wrap this episode? AJ.
This was awesome. This is so fantastic. Thank you so much for all. Oh, just kidding.
No, everything's good.
Oh, this is for top line. I thought Andrea was still there. Can you read? We're just
We can
going.
cut this out. We can cut this out.
This one.
But I'm saying she's gone. Now we wrap the episode, then we cue the music, and then we're done.
Any party? Okay, go ahead. Go start that segment over again.
I say we keep this in. I say that we get parting words of wisdom. Fucking idiot.
What the hell are you doing?
Stupid.
What the fuck are you doing?
Stupid.
You freaking moron.
God, I hate you. Any parting words of wisdom?
I would say I'm going to take 3 giant deep breaths after this because I took 2 and I need 3 more and I'm good to go. I'm feeling so energized. I feel so good after talking with Andrea. She's awesome.
She's so smart. Yeah. Awesome.
Badass. Just like I love the mindset. Like there's just this thing in her where she just doesn't give a fuck. Like whatever's happening, she can make a momentum in that environment. Like she has ideas and thoughts on what to do. She seems like just so well, I don't know, the acumen is just next level. And I keep going back to this idea of how much of her journey has been impacted by that little bit of time under a PE company.
Yeah.
And from what she was saying, it seems like such an impactful moment in her career. And it seems like a lot of revenue professionals might benefit from going to a PE company and developing that rigor and that understanding of how to drive sustainable growth versus if you only spend your time in a venture funded business and money, especially in a market where money is easy to get, it creates some really bad habits that are hard to break.
Yeah.
Wait, did I just hear that correctly? Go work for a PE company? Is that
well? She was saying she worked for Vista, and there's a specific,
I know.
When you work for a Vista company, it's a thing, and I think a lot of people, when they're working for that Vista company, if you talk to them, they will complain most of the time, but then you come out of it. You know, it's like the Navy SEALs or whatever. It's just you come out of it.
Going for Barry's workout.
Yeah, exactly.
Sam, what's your parting words?
My parting words are find somebody like Andrea because growth is possible. You just have to be smart about how you're thinking about spending your dollars. That's a lesson to myself. I talked to another brilliant marketer the other day, Latney Conant, the CMO of 6 Sense. And I said, what percentage of your spend is on growth versus retention? And she said 65% growth, 35% retention. And when I look at our marketing team and our overall spend, we're barely spending anything at all on growth. So, no surprise that we're not going to grow 200% this year. But it's also because, you want to have the people in place that know how to deploy that capital so that you can make sure that you do grow. So
maybe she'll be working at Schmavillion sometime,
or at least be an advisor to Schmavillion. You know,
one thing that she said that I found really interesting. She said she was a customer of Teampay first. Yeah. How many CMOs anecdotally have you heard that are like customers and then they go join a company? It happens so often.
It does.
Yeah, it does happen. And I mean, that's why CMOs are great to market. That's a great persona to sell to, in my experience. Yeah. It's way better than HR. All right. This has been episode 3. I'm your host, your co-host, Sam Jacobs, CEO Pavilion. For Anthony James Bruno, AJ Bruno, the CEO of QuotaPath, and Asad Zaman, the CEO of Sales Talent Agency. Thanks again for listening. Give us 5 stars on the iTunes store. Rate us wherever you find your podcasts. And email us or find us on LinkedIn. You can email me, sam@joinpavilion.com. But really, thanks for listening. Let us know who you want to hear from next. And we'll talk to you next week.
Thank you for listening to this episode of Top Line. To learn more about the trends, news, and developments impacting the world of B2B SaaS, head to joinpavilion.com, where more than 10,000 of the world's top go-to market leaders go to achieve and unlock their full professional potential.